right, everyone. Welcome back to the channel, which is all about income-oriented investing. And I'm joined by a very special guest today, Nick Kuriya, who is the head of a crypto at Purpose ETFs, rather. So, Nick, thanks so much for taking the time to join us today on the channel.
Yeah, thanks, Adriano. Really happy to be here.
Yeah, so as we know, Purpose is a leader when it comes to crypto holdings in Canada. So you guys have BTCC, ETHH, which is just, the regular ETFs that hold the Bitcoin and Ether. But you also have what I really love and what my community really loves because we're income-oriented investor, the yield ones, right? BTCY, ETHY. And I've been getting a lot of questions, a lot of worried emails, and I'm sure as head of crypto, you've been having a very busy last couple of weeks with the whole FTX debacle. So I'm going to ask you some questions about that. And hopefully you could clarify basically what happened and the safety of, where the Purpose keeps its crypto. So first things first question, and I'm sure you had to do this a million times in the last couple of weeks. Can you briefly explain the FTX collapse in your own words, just a general overview to someone who is not really that familiar with the situation? Can you just briefly explain what happened?
Yeah, absolutely. Look, I mean, this FTX collapse has been described as the most monumental event in crypto history, right? So, everybody's been talking about it. It's gotten press in traditional media. It was in the New York Times, Bloomberg, you name it, right? So it's really hard to sort of decipher, because there's all sorts of information flying out about it. But I'll do my best to give you guys a sense of what actually happened, right? So it all starts with Sam Bankman-Fried, who is this young wonder kid. I think he went to MIT. He's a math whiz. He starts his career out as a trader, and he subscribes to this philosophy called effective altruism. And that philosophy basically, fundamentally, you could describe it as, making as much money as you can to then give it away, right? So that was kind of the principle around sort of how he operated, right? And what Sam did was, he worked at a trading firm, and then, he was in some of the early days of crypto, he recognized an opportunity to arbitrage markets between the United States and Japan, and so he made a substantial amount of money with that trade. And so he became quite legendary in the community for identifying that. What he then did was he was able to parlay that into the creation of sort of two entities. He created a company called Alameda Research, which was a hedge fund that traded in sort of the crypto sector. And then in addition to that, he also established FTX, which was a centralized exchange. And so an exchange, you could think of it as no different than the Dow Jones or the Toronto Stock Exchange. It's sort of a place where people can buy and sell, right? And it facilitates a market for buying and selling. So you have these two entities, and one of the things that early on that sort of caused a lot of red flags for people was the fact that he owned both, right? He owned both the market as well as a trading firm. And generally you don't see that because obviously, if you're in a marketplace and independent investors are trading, well, they're trading often sometimes with a counterparty that's owned by the exchange. And so the reason that's a problem is that can create a bit of a conflict of interest because
Right.
the exchange can provide data to the trading firm, and so they would know, for example, what people are bidding, how much they would have preferential access and treatment. But despite those red flags, Sam reassured sort of the industry that look, they were run really separately. There was independent controls, and people believed him because he was he's a very charismatic and influential individual, right? So fast forward a period of time, and FTX grows and becomes one of the leading crypto exchanges in the world. Billions of dollars of assets. Okay, and FTX, Sam is sort of recognized as one of the wonder kids in crypto. Sam is wining and dining with world leaders. He's donating to political causes. Like he's
Right.
basically a celebrity. I think he was also the world's youngest billionaire. Like he beat Mark Zuckerberg's sort of record of making his first billion. And so that's sort of the cachet that Sam had. He was also involved in just like an innumerable number of deals in the crypto space. So he was making venture investments. He was funding companies. He was making all sorts of partnership deals. He named the Miami Heat's arena, FTX arena. et cetera. Major league umpires had sort of the FTX staff. So he had a lot of credibility and was very active, right? And an interesting thing happened. So, I want to say maybe about 3 weeks ago to a month ago, there were some reports that were surfacing about FTX's balance sheet and Alameda Research's balance sheet. Okay. And the leak there was that there was a significant portion of the balance sheet that was sort of in what we call FTT token. Okay.
Yeah.
And to give you guys context, what FTT token was imagine a loyalty currency. Okay. So imagine, you go on FTX as an exchange and you trade, and the exchange says, look, for every trade you make, we'll give you one FTX token. And it's almost like a loyalty reward, right? So you get a token. And so FTX would do that with their customers. They would give them sort of their own token as a reward for doing business on their exchange. And then what FTX would do is they'd say, okay, look, every month, we're going to buy those tokens back for, whatever, some amount of value. And so what that did is it created a market value for this FTT token, which really was like a reward, right? Think of it as like an air mile or, a frequent flyer mile or something like that.
Yeah, it rings a bell with me because I actually worked at Aeroplan and then they got bought out by Air Canada. And then I worked for Air Canada. So I know exactly, that's sort of the reward. It's basically kind of like creating your own little currency, right? Out of thin air almost, but continue, please.
Yeah. So exactly. So now imagine, you created this currency, but instead of, the value being fixed, the value is whatever the market determines. And so in the market, FTX was one of the biggest buyers of these tokens. And so they would, create a bit of a price, but there were others that held those tokens. Okay. And so one of the holders of that token was a company called Binance.
Competitor.
And Binance is a competitor, and basically I think they are the largest crypto exchange in the world. Okay. And so the founder of Binance, his name is CZ. He goes by CZ. He's well known in the crypto community. So he saw some of those reports, basically suggesting Alameda, held a lot of FTT token on their balance sheet, and he got a bit worried because he owned a lot of that token. And the reason he got worried was he was sort of worried about the fact that a lot of those tokens were sort of controlled by the entity that created them, FTX and Alameda. Okay. And so what he did was he kind of set off a chain reaction of events that created basically what took FTX down, which I would summarize as a combination of a liquidity squeeze and fraud, right? So it's like two things that took them down. It was, liquidity squeeze and fraud. So what CZ did was he said, hey, you know what? He tweeted it out. He said, as part of my risk management, practices of my company, I'm going to be liquidating. I'm going to be selling all of my FTT token, of which I think I own about 500 million or so.
It was a lot, right? He dumped it basically.
Exactly. And what that did was that it created a lot of selling pressure because there were not enough buyers of this FTT token. And so the price of FTT went down and crashing. Okay. And when that price of FTT came crashing down, what it did is on Alameda balance sheet, it reduced the value of the assets because they held so much FTT token, and that created a liquidity concern. So it's equivalent of, imagine you went out and you took a mortgage on your house. Okay. Now all of a sudden the value of houses goes down significantly. Okay. And then the bank gets a bit worried and they say, you know what, we want our money back. And that's kind of what happened to Alameda. The value of their FTT token went down, and their creditors started asking questions saying, we kind of, need our money back. Okay. Now, what was unbeknownst to the world was that FTT token, was held by Alameda. Well, they used that FTT token to actually get loans in US dollars from FTX. So FTX gave Alameda US dollar, currency, okay, in return for FTT token, which effectively was becoming worthless. And that US dollar amount that they loaned out to Alameda, that didn't come from sort of FTX's corporate treasury. That actually came from user deposits on the exchange. And so that's where the fraud comes in.
That's the fraud.
Right? So
yeah,
exactly. So this is the equivalent of, imagine, you go up, and you open up, a bank account. And look, I mean, banks lend your money, like they have a license to do that, right? But imagine you went to your brokerage account, okay, and you bought $100,000 of Apple stock, okay. Now imagine if when you deposited that money, that $100,000, okay, that your brokerage actually took that money and they lent it out, and they didn't actually have that money, or they didn't have your assets, your Apple stock. They didn't hold it. They lent it out to somebody else, and then that individual lost money.
Yeah,
And that's kind of what happened with Alameda. They had actually, through their hedge fund trading, they actually lost the US dollars that they borrowed. So that created, look, I mean, the numbers are sort of churning, but it was billions of dollars of losses that created. And so, effectively, that's what basically brought FTX and Alameda crashing down, because they were short billions of dollars and they didn't have the money.
Yeah, no, that it makes complete sense, and that's what I've been, I've been watching videos, and some people are comparing it to a bank run. I saw a video with the Wolf of Wall Street, the real one, explain it, and it makes exact sense of what you're saying. So it's a combination of certain things. So it's kind of new, but it's also kind of old too, right? It has elements of things that have happened before, and over and over and over again, a bank run with fraud, so banks are allowed doing that, right? You put your money in a GIC, for example, they lend it out to other people to make more money on what they're giving you. But FTX is no bank, right? That's for sure. So this, in my opinion, it's pretty much caused, especially by the lack of regulation. And we'll discuss that a little bit later on. But first I want to, and by the way, thanks for the whole summary. It was really well said, well summarized. I think any regular person would understand what happened there. Thank you so much for watching, everyone. I really appreciate it. Don't forget to hit that thumbs up button, that like button, and make sure you're subscribed not to miss out on my future content. Of course, hit that little bell next to the subscribe button so you're notified for any new content that comes out. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once, which is awesome. So this is a companion tool. It's a reference tool that will help you build your own portfolio according to your needs and goals, and it covers both the Canadian and American and US stock markets. So make sure to check it out. I have a video explaining from A to Z exactly what the product is. I showcase it, so there's no surprises. If you're interested, make sure to check out that video. Also, right there on my website on the homepage, I do offer a one-on-one coaching session with me. So this is a 1-hour Zoom call with yours truly for in case you need personalized help. I'll answer all your questions and I'll help you best I can. Just remember, I'm not a licensed financial planner or financial advisor. These are just going to be friendly conversation, right? It's just going to be my opinions. But if ever you're looking for that personalized touch, that personalized help, you could book a one-on-one with me. Make sure to check out the message on top of that calendar. That will give you a status of my bookings for that month. Also, we do have a Facebook group, great Facebook group, over 12,000 members. So make sure to join our community. The group is called Passive Income Investing, a nice Facebook group where everyone is sharing their thoughts and opinions and sharing their experiences. So it's a really nice group. We make sure to stay on top of the scam and the spams, and we delete those right away. So make sure to join our Facebook group. If ever you want something more personalized with us, you could follow us on Instagram. That's where we post more personal things on our adventures here in Panama. So follow us on Instagram if you want. And how do I always leave you? Continue to stay safe, continue to stay healthy, and of course, stay passive. See you next time.